Hi, everyone. I am Celeste Barr. I am with eXp Realty. I've been in the business now selling real estate for 36 years. And today, my guest is Brian Jessen.
Something I wanted to talk about is down payment assistance and grants. So that's money that comes to you at closing. There's different programs, different things you could, and it's hard to know which ones apply to you and don't. And that's our job as your lender to do it. And one, as an example, is one for Cook County, Illinois only, but it's up to $25,000. You don't have to be a first time home buyer. Some areas have income restrictions, some do not. I know if you make 145,000 or less, you're going to qualify, and that's up to $25,000 and a zero interest rate.
Oh,
Uh, 5-year forgivable loan. You don't make any payments on it. We're the only lender with money left because we have about $20 million left of that allocation. So if you're interested in Cook County, it has a credit score minimum of 600 credit score, which is extremely generous, and other down payment and grant programs. For instance, there's one from Wintrust for $2,500, which is our company. There's ones through the state of Illinois. There's other ones through the city of Chicago and so on. So our job is to figure out which of these you qualify for as part of your pre-approval. And the pre-approval costs nothing. And some of these you do not have to be a first-time home buyer. And the definition of a first-time home buyer is someone who has not owned a home in the last 3 years. Some of the grants and down payment, you have to be affiliated with a bank. So we're a mortgage company in a bank, and they don't have access to some of those programs. So just be aware of that there's a lot of money floating around. You can stack time, sometimes multiple ones for clients. And it's part of the pre-approval process with you, which cost nothing, which is as low as I can go. We can
it's
figure out
incredible.
which ones apply.
Yeah, and this program is going on for how long?
Well, we have about 20 million of allocations still left. So I would say for sure the next 30 to 60 days. The bank's talking about extending it just using our own funds, but we'll see if that happens. But I know for a fact we're the only lender with that allocation for Cook County. So if you have an interest in Cook County, you just want to explore it or elsewhere, call us because it's our job to figure out which of these programs actually apply to you. Because you'd be surprised. People, down payment money and money to go for closing costs is a big obstacle for a lot of people. And we try to help overcome that obstacle.
And your credit score that you have to have if you're someone who is earning, you're under 140,000, you said, right?
Mhm.
What's your credit score have to be?
600 or higher, which is a really pretty low credit score. Most people have a credit score somewhere between 660 and 700. But if you have a higher credit score, great. If you have a 620 or 640 or whatever, that's totally fine. And again, our job is to figure out whether that program or whichever program might be it fits for you. And getting the pre-approval done is valuable for many reasons. Even if you don't want to buy till next year or the following year, we can kind of go through the steps to know what to expect for yourself. And if you have a credit issue, we can hopefully work with you to fix that credit issue. Or if you need to make a little more income to get what you need or what you want, we can kind of work with you to see where you are. And it doesn't cost you anything. If you don't buy something now, we've established a dialogue and a relationship together that could end up being a place you buy next year or the year after.
Just starting with your loan process. Nobody is going to know how much you're able to afford until you speak up. You've got to be able to ask a lender, this is who I am, this is what I'm offering, like this is my credit score, and the lender's going to help you with that.
So there's a lot of money down payment out there, and the pre-approval process is pretty easy, no cost. There's no obligation, but it does give you a lot of information. If there are issues to work through, we'll have some time to get through them to get you the best interest rate and the best loan terms for you too.
So, Brian, let's talk about your next program that you wanted to talk about, which was the medical one.
Yeah, there's a program out for medical professionals that want to buy a property. It doesn't have to be the first, single family home, townhouse, condo, 2 to 4 unit. And it's not just doctors. When people think a medical professional program, they're like, well, I'm not a doctor. You could be a dentist, you could be a pharmacist, you could be a veterinarian, you could be a chiropractor, you could be a PhD candidate. So it's a program where you can borrow $1 million with nothing down and you have no mortgage insurance. And the rate, for the 100% down is maybe 0.25% higher than the market. And if it's 95%, it's only 1/8% higher. And if it's less than that, it's the same as if you put 20 or 30 or 40% down. It's the same interest rate. And there's no mortgage insurance, which is a payment you typically make to protect the lender if you don't put 20% down, but that's waived. And we can go above $1 million at different categories. And if you're somebody in the medical community and you want to talk about it, it's a very good program. We can help finance if you want to open up your own practice or you want to buy another practice and that type of thing. So our bank does a lot of that type of financing in addition to helping you with your home. Since I have a client that they closed on a condominium, so they were very happy. They referred their sister to me, and their sister is a very young veterinarian, but we're helping her with her property because she's in the medical community and she's putting nothing down. She's buying a property for around $600,000. She's getting a little bit of credit from the seller as well. And she's like, I never thought I could buy a property with nothing down. That's like, and have a really competitive interest rate and not pay any mortgage insurance.
So, Brian, talk about the other program that you were about to talk about, which is the one with the ability to do renovations.
A lot of properties around Chicagoland are updated. A lot of properties need work. So whether you're a realtor with a listing that needs work or you have a buyer that likes the neighborhood, likes the bones of the house, as they say, but it needs a lot of refreshing, we have a program that allows you to borrow on the future value of what it's going to be worth when you renovate. So people don't necessarily have the money to do $100,000, $200,000, $300,000, $400,000 renovation. But if you only had to have 10 or 20% of the cost of the renovation available, we could finance the rest of it because we're going to do an appraisal when we have that proposal based on the future value. It's money that's kind of, as the project goes along being renovated, it gets dispersed out as the renovation's happening, but it also guarantees your interest rate at the end. So no matter what happens with interest rates, if they get better, we always can adjust it at the end. But if they're worse, you have zero exposure. So if you're renovating or building a house on some of the larger projects, you have up to 2 years to finish the new construction or the renovation.
Is this restricted to just interior items on the home?
No, it's not. In fact, it's also for a primary home. It's for a
Mhm.
second home, also for investment properties. So people that are buying investment properties want to renovate them. It's available to all property types. But, I have one right now. It's buying a 3-unit property and they need to renovate it. It's an older property. It's in the northwest suburbs of Chicago, but it's from the 60s. So a lot of the stuff in it is very dated. So they want to renovate it as an investment property, and it will also increase the rents quite a bit. So it's going to help that investor not only finance the renovations, but increase their cash flow because they're going to get higher rental income, on a renovated unit than something that looks like from the Brady Bunch. If whoever's listening actually knows who the Brady Bunch is, you might not know who the Brady Bunch is, but I saw that show when I was a kid. Anyway, so you should have higher rents, as an example, an investment property that's renovated versus one that's a bit dilapidated.
What is that program called? Is there a name for it?
It's a construction to permanent loan. So it's your mortgage to buy it. If you've already bought it, now you're renovating it, it's the money to renovate it, and that's your interest rate at the end when you're finished with the renovation. So you don't have to worry about it. It's interest only while the work is getting done, and then it becomes a principal and interest loan when the work's done, and it converts to a mortgage, assuming rates aren't lower. If rates are lower, we either refinance it or do a streamlined refinance of it if rates are better at the end of the project. So it's not a lot of lenders have it. Some do, but many do not. And the ones that are mortgage company focused and not tied to a bank try to act as an intermediary. So if our interest rate for that is 6%, their interest rate might be 7.5 or 8% because they're passing it off to somebody else and they get a fee for that. So therefore it's reflected in a higher interest rate.
And is the primary person in charge of renovation, is that restricted?
It depends on the program, but like usually you can't do the renovations yourself. You have to have a contractor unless you do that professionally, or you have a series of ones you've done in the past that can show your history of doing them. But generally speaking, you want a contractor, and I can even help you with some names on that if it's Chicagoland specifically.
Absolutely. Is there any other programs that you would like to bring up?
Last thing I want to talk about is a change for condominiums. So condominiums traditionally, if you were putting at least 10% down, they had a review of the condominium project, but it was a one-page, very simple form. The management office would fill it out. You didn't need a lot of documentation about the project. Now, the big agencies that buy mortgages from mortgage companies and banks are called Fannie Mae and Freddie Mac. They made a recent change that made it more rigorous for buildings that are more than 10 units. If you're 10 units in your building or less, it doesn't apply to you. So what that means is they won't let you do the one-page thing to the associate anymore. You have to send them a full questionnaire. You have to get their budgets. You have to get their minutes of their board meetings. Then they have to have a reserve study, which means the money that they have in the bank is going to cover any projects they have coming up. So there's just a lot more scrutiny. So there's a lot of projects that wouldn't have had issues uncovered before that may have them uncovered now. And they could be relatively minor, but could kick the condominium project into what's called non-warrantable, meaning that Fannie Mae and Freddie Mac will not buy those loans. So the mortgage company like a Rocket or a Guarantee Rate or a Cross Country and so on usually don't have solutions for that. We do them as what's called non-warrantable condominiums. The rate's a little higher. You have to become a banking client of the bank, but we can finance that. And then once the project fixes whatever the issues are, then we can refinance it at a market rate. There's one that I want to mention that has like balconies that are being replaced. So the balconies being replaced makes that project for now non-warrantable, but they're going to be done with all the balcony replacements by the end of 2027. So then we just would refinance that loan, make it a Fannie Mae, Freddie Mac saleable loan, and the interest rate would drop, assuming the interest rate stayed the same or went down. But being aware of those changes will just make condominium lending a little more tricky, and you're going to have to go to people that understand the changes that have happened, because they're going to promise you an interest rate and then all of a sudden there's a problem with their project. So our job is to try to vet that out as early as possible. And you don't have to be an expert on any of this, because I'm supposed to be your expert for lending, doing this such a long time when it comes to real estate and honesty and transparency and neighborhoods and what you're looking to accomplish in your real estate. That's Celeste's area, which is why we work well together.
Yes. Well, Brian, this has been a wonderful session of all kinds of ideas in the lending business. And for everybody that's watching, I want you to know Brian and I will probably continue to do more of these, because we feel very strongly that the best piece of advice we can give you is, and I'm going to let Brian say this because he's said this to me before. What's the one piece of advice that you would tell someone?
I would say go to a reputable, non-salesman-y like lender, hopefully me, but someone else that's trustworthy, and get prepared early, even if you're not interested in buying until next year or the year after, because we can kind of get a path you set. We can let you know what you're eligible for, what things look like, and really dispel a lot of things that you might have heard that don't apply to you. Could be good or bad things that don't apply to you, but to have full transparency.
Opportunities that are available to you, because when we're talking about the money that's available for a first-time home buyer, I mean, that's huge.
Yeah, and there's you can stack several of them on top of each other.
Yeah.
We can help you prepare some of the programs. If you don't need you and your significant other, maybe just one of you needs to be on the loan, you could qualify if you don't need both incomes. So our job is to figure that out for you, and it costs you nothing. There's zero obligation. You get to use my more than 25 years of knowledge to help you out. And we will both want to go to the closings and see your smiling face, because that's our payoff. And like I said, we've got everything to gain by making you happy, and we have everything to lose if we don't do the right thing for you. So you've got to trust somebody. Somebody's got your best interest at heart, and not be pushy or not be salesman. And I think we've got a team put together that accomplishes that goal.
And I'll just say one more thing, and that is that Brian's information, he's with Wintrust Mortgage. His information will be in the description below, as well as mine. There is no time like the present to pick up the phone and give him a call and ask him, how do I qualify? And
How do I
he'll
start?
help
How do
you.
I start?
Yes.
Yeah. How do I start? Like, it seems overwhelming to me. How do I start? We'll break it down into small, manageable steps. And again, you won't ever get the feeling like someone's not doing something that's not in your best interest.
And I know you're in great hands. So thank you so much for watching. Thank you,
Thank you,
Brian.
Celeste.
I will look forward to hearing from you.
Yep, sounds
Okay.
good. Bye,
Thank
Celeste.
you.
Bye, everybody.
Bye.
Bye-bye.